Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Yesterday, I exited my Binance futures position at 93,271 after spotting weakness in price action. Interestingly, in that same downward move that triggered my exit, Bitcoin quickly dipped to 91,900, but then sharply bounced off the horizontal level of historical support and resistance around 92,100. That strong reaction sent price immediately back into the range we had been tracking earlier. From that moment on, the structure began forming into what now looks like a textbook symmetrical triangle, with the apex appearing around 93,600. Bitcoin currently trades just under that point, tightening its price action in a classic neutral pattern marked by converging trend lines. Lower highs meeting higher lows. While this formation generally signals consolidation, we're also seeing a bearish moving average crossover, which adds another layer of complexity to the near-term outlook. Support is currently anchored at the ascending trend line near 93,400 to 93,500. Below that lies the more substantial support at 92,100, the same level where bulls aggressively bought the recent dip. If bears manage to break below that trendline support, we could quickly revisit the 92,000 zone. On the flip side, reclaiming levels above the descending triangle resistance near 93,800 would be a strong signal of renewed bullish momentum, potentially triggering a rally toward 94,400 and 95,000. This symmetrical triangle reflects indecision, not bias. The breakout direction will carry significant weight, and traders should watch closely for a volume spike to confirm the move. Fibonacci candles are showing a tight consolidation zone, reinforcing the idea that the market is coiling for a larger directional shift. Meanwhile, the wave trend indicator shows decreasing money flow on the 15-minute chart. Red bars are starting to print, and the individual wave patterns are becoming shorter and more indecisive. These are classic signs of coiled momentum, suggesting that a sharp move is coming, up or down. The 3-day liquidation heat map shows strong interest in heat building around 90,100 and 89,500. These levels align closely with our horizontal line of previous support and resistance. The question now is, will we see one final liquidity grab to the downside before the next leg higher? That scenario would present a solid dip buying opportunity. But with bulls continuing to buy up every dip, it's not guaranteed we'll get that chance. Looking into the ETF flows, the data from April 22nd was just updated and it's impressive. In total, there were 912.7 million in inflows, with BlackRock contributing 193.5 million alone. At the time of recording yesterday's video, those BlackRock numbers were still missing. Today so far, we've seen another 149.4 million in ETF inflows. ARK Invest is currently leading with 129.5 million. However, the updated figures from BlackRock, Fidelity, Grayscale, and Bitwise are still pending. If they report significant buys again, it could serve as additional fuel for a potential breakout. I will continue updating you daily. Join the free Discord for real-time trading thoughts. Click the like button if you got value from this video, subscribe and turn on the notification bell to stay updated. And see you in the next one.